All right. So nobody on the call as a investor and a trader can say that they don't have an issue with discipline or risk management. They will be lying to you. Okay. Um, a lot of people think when you get more money in your accounts that it's going to be easier for you to, get consistent profits and for you to withdraw. I just need to make it to the 1,000 plus mark is what a lot of people may think. But people don't understand. And the song that Biggie, and them rap, more money, more problems. It's the truth. When you get more monies and more commas in your account, it's more issues when it comes to the risk and the discipline. So if you have not got it down pat when you only had $200 or $300 in your account, you're going to be a whole psychopath when it comes to thousands in your account, because you're going to want to up the lot size. You're going to want to see more money faster, and it's going to be a lot. All right. And so when we do the risk calls and the the lot size calls, you should always try to make it your business to get on those, because these are the things that we can't help you with when you get off of these calls. Right? I can't be at Lourdes' desk with her saying, no, don't press that. Right? I can't be in Atlanta with Rockstar and Champ and Q and say, no, don't add that lot size there. Okay? I can't even be down the street with my boys from South Carolina for them to say, no, that's probably not smart to do, right? So when it comes to risk, this is the most important calls that you will be able to get on as a trader. Because if the mind is intact, okay, if you're mental, right, if that discipline, okay, if that urge is together and you can control that, you will then be unstoppable. Okay, you will be unstoppable in this market, and it will really be like for real, it will really be, and you will be an automatic ATM walking around on two legs. Okay, but you can be a whole assassin on the charts. Please hear me. But if you don't master this part, you will be from group to group to group, or you'll probably stop, right? Because you'll be thinking that what? Trading isn't for me, okay? If everybody can unmute and let's just be honest with each other, at one point, you probably thought trading ain't for me because I was losing so much. Talk to me. Tell me if I'm lying.
You ain't lying.
It's true. Yep.
Okay. Right? We got to be honest. We got to be honest with ourselves. We all have been there, right? Almost everybody on the call has probably said something to me. Coach, hey, listen, I need to holler at you. Right? Coach, hey, listen, I need to talk to you. Call me. Coach, I don't know what I'm really doing wrong. Okay. But the thing is, you ever ask yourself, why can't I see the moves? But then when it's time to get in, and then I see that, okay, it did what I said it was going to do, but I lost the trade. Well, a lot of times, if we just adjust our risk to what we're doing, we can stay in for the pullbacks and stuff. Right? We can stay in for the deep pullbacks. But a lot of the times we don't master that part. And that's why we get frustrated and say, oh man, I'm going to take a break. Now listen, I'm never telling nobody not to ever take a break if you feel like you just losing. But just because you take a break, that doesn't mean you're supposed to quit at it, because it's more of the mental than the skill. So we're going to talk about risk management tonight, and I'm going to give you the reality risk, okay? Not something that somebody created that you see on YouTube or online, and you're like 0.0.20, 0.001, where you never ever make any money because it's so low. we're going to talk about what you really could do, okay, and what you can really get away with in this market. So y'all ready to rock and roll?
Let's get it.
Oh, man.
All right. All right. Let me see. Somebody in the chat says, oh, Grace said that's true. All right. So we're going to first talk about some of the problems that we face, why the risks are sometimes a little higher than what we, should have, right? Some of the problems that all traders have thought about and starting this journey is because you're thinking that because the market has a lot of money, that we're supposed to try to make as much money from the market in a day as possible, okay? We all have thought, I need to try to make as much as I can off of this market as possible while I'm in it, right? I know I've said that. And if I've said it, I'm sure y'all have probably said that, okay? You could be in the trade, you can grab whatever you're gonna grab, and then you see it still doing something, you're gonna go back in, and you're gonna go back in, and you're gonna go back in, because you're trying to get as much as you can grab from this legalized bank robbery system as possible, okay? And that's the wrong way to think. I don't care what nobody ever told you before, that's the absolute wrong way to think, because you would never be able to grab it all, right? A lot of the reasons why we think this way is because we have a lot of stuff going on, okay? Whether it's our family responsibilities, right? That's the main thing. That's why I put it here at the top. That's the main thing why a lot of traders double up, triple up, they go in, back and forth, they in and out. Again, I'm gonna get it, I grab it again. Oh, it's still dropping. Let me grab it again. Because let's just be real with each other. The struggles to make sure that our responsibilities are taken care of at the house, it weigh on you, right? Am I alone?
Nope. Period. Not at all. That's a fact.
Okay, like that's the top reason that most of us, now, if you don't have a lot of responsibilities and you still stay with your mom or your daddy, then you may not have a lot, right? But you still have some responsibilities there as well. But for the most part of the people on this call and all traders, to be honest with you, the struggles for us to have the responsibilities at the house is the main reason why we feel like we got to go, get it, go. Okay. And then you have some people that have working conditions, sometimes your jobs are just horrible. Sometimes you're just tired of not getting paid what you're worth at the job. Sometimes it's stressful. You got to work 12, 13, 14 hours. Okay. I got a lot of truckers that's in this program. A lot of y'all y'all tired of going from state to state every day. Okay. And so a lot of the times the working conditions be a reason why we say, let me go in again. Let me put this lot size this. Let me just go in, not realizing that I have not confirmed all of my confirmations in order for me to get into the trade. Somebody say facts in the chat, right? Listen. And then we got lack of savings, right? We don't have a lot in the first place to be playing around with when we even come into this space. We're coming in this platform, we don't have millions and billions. Some people have a lot or good bit to play around with, okay? But we're thinking in our head, I don't really have a lot to be blowing account. I don't have no savings just for investing. Now, some of us do, but a lot of traders don't. Okay, so we're thinking, let me double and triple this account fast so that I can start making some money. Okay, that's our mindset when we're trading. Let me triple this, let me get more fast so that I can start making some money. Okay, I'm pretty sure one of those 3 topics, I've hit everybody on the call. Have I not? Can we all agree? One of these reasons, or maybe all 3.
Big
Yeah, you
fact.
hit me with all 3.
All of them.
All 3, like I said, if it ain't all 3, it's got to be one that each person on here can attest to why we do the opposite of what we know we're supposed to do in this market. And there's nothing wrong with it. You know why? Because we're humans, right? We have emotions, we got issues, we got problems, we got crisis, we got tragedy, we got economy, like this is just the world that we live in. So there's nothing wrong with you having these issues, because everybody has had these issues one time or other. But the problem is we are trying to get as much as possible, the fast as possible. And when it comes to a market that is designed to continually to move fast, we are trying to play a game of chess with a platform that you'll never really win the chess game. You'll just have a play here and a move there and a play here and a move there. But to actually win that chess game of grabbing all from the market, y'all will never win. Okay, so we go over some issues. The reason why our mental is a little adjusted when we are not as sharp as we should be, okay, in this market. All right. So from all the problems that we have, though, right? Working conditions, family responsibilities, all the other issues and problems we have financially, the solution, we've already found that. Okay. We've already found the solutions. And that's, of course, Forex and stocks and crypto, right? So we got the solutions, right? So now we need to figure out, well, if we got the solution to the problem, why are we not consistently withdrawing? Is that a question that everybody done asked themselves since they've been investing?
Facts.
Withdrawing, what's that?
Okay. If I have the solution to my financial issue, why have I not been able to consistently withdraw every month? Let's say you don't even do a week or 2 weeks or whatever, just every month. Why have I not been able to withdraw something, whether it's $100, $1,000, or whatever the case may be, even if it's a funded account, okay? And if it's a funded account, that's real serious, because you definitely should be able to do that if you got a funded account, all right? So this is a question that we have to ask ourselves. Are we really using good risk management, or are we gambling? When it comes to the risk, when it comes to these lot size, when it comes to us going in and out, right? We're trying to scalp something real quick, but at the same time, we haven't went through all of our confirmations, even off the scalp. We in and out. It's dropping, the candle dropping. Yeah, it's news coming along. Yeah, we've shown you how to trade news, but you still do the opposite. Am I really using good risk management, or am I gambling? Okay. And as you see, I say right here, as I'm going to continue to say till I'm blue in the face, trying to get it all in one day could risk it all for you. And we have to ask ourselves, is it really worth the risk, right? Is it really worth the risk? Now, I'm going to go over Coach Shanika's gambling lot sizes, right? I'm not talking about anything that you saw on the internet or on YouTube. It's some risk that people, put, and they'll tell you, if you got $100, do a 0.01, and if you're getting $1 or $2 off of 100 pips, like, listen, I like to keep it real with the people that I coach, and I like to tell you, what's really doable and what's really too much. Okay, so these is my suggestions, right? I'm not talking about anybody else's. Okay, so gambling lot sizes. You're understanding that Too high of a lot size to put your account in danger if it goes left. We all know that. And so we will lose some. That's just a fact. Can't get around it. I've never met a person that said they haven't. If they tell you they haven't, you better run away from them because they are definitely cappers. They're liars. Everybody will lose some. But when you're gambling with the lot sizes, you're going to increase the risk of your losses off the top before you even press buy or sell. Before you even get in the trade, you increasing the risk. So we already know that the market is risky, right? We are accepting the risk of being in a market that was not designed for us. Okay, so we know what the risks are. That is why, as a coach and also Camden and BI, we have been trying to ingrain in your brain that you must know the skill set for real. It's mandatory. You cannot skate by with grabbing a candle here and there. You must know it for real, because the more you know the skill down pat to a T, the less risk you're going to have in the market. The less you know the skill, you're going to add another risk on already the risk that we already have. And then just imagine, we already in a risky market. I'm going in and out of trades without even making sure my confirmations is there. And then I want to add an extra lot size on. Well, your odds are set against you, ain't it? Ain't it? That's a lot of risk.
Yeah, you tripping.
That's a lot of risk that you adding on to an already risky market. Remember, we don't control this thing. We don't control it. Okay. So risking more to gain more isn't the right combination. Risking more to gain more is not the right combination when it comes to this market. Now, I'm not talking about if you're on the blackjack table or if you shooting craps and rolling dice and pity pad or whatever spade. I'm not talking about that. I'm talking about this market. That is not the right combination. Okay? Because we want to take less risk as possible to gain anything in this market. Because by doing it that way, you live to fight another day. If we risking more to gain more and we lose, then what just happened to our account, guys? Pow.
Blown.
She said, pow. You done. Right? Now you got to either save up to get back in, or you about to use more extra money to refund your account. You done. Okay? So a risky lot size in a regular account, risking more than 10% of your account on any trade. Remember, this is how I feel, right? This is what's helped me be able to not go back to work. Okay? And some people, listen, I've had conversations with people and they tell me I'm a punk when it comes to like the market, like in trading. They say I'm a punk. They like, man, you those little baby lot size, you a punk. You got this on the account. You got this on their head. And I say to them, well, you can be a punk and risk what you need to risk, or you can be a risk taker and you never withdraw. Which one you want to be? Which one you want? Withdraw or you don't want to withdraw? Okay, 10% of any trade off of your account, whatever lot size that is, whatever account size you got, risking 10% plus off of one trade, that is a risky trade. And for God's sakes, if you got multiple trades in, then you know that's real rough. I'll just say it like that, right? If your regular challenge account risking more than 15% off of your account size on any trade is risky. and you got thousands to play with in there, it's still risky. Okay, we're trying to take less risks in order to gain something than to take more risk to try to gain more, but you may lose more. Okay, does that make sense to everybody? Before we go to the next slide, does that make sense? Let me know.
Most definitely.
Yes, it does.
Yes.
Okay. All right. Now, I have created my own because I've seen a lot of stuff on the internet, and I'll just be honest with you, some of those lot sizes that they talking about is, you know, you should stay in. Ugh, God, it just would irritate me to be in a trade that long to get that little bit of the amount. Okay. Now, risky lot sizes on a regular account, right? $100, risking anything higher than 0.15 is risky off of one trade. I'm just telling you the facts. I don't care how you feel. Okay, I'm just telling you what I have seen, what I have did, and what I know to be true, and what I know that works, and what I know that don't work, right? $500 in between the $500 to $1,000 area. Anything you risking higher than the 0.50, which is a half a standard. Okay, you got to remember this lot size that we have for the pip count. It can go to our way, but when it doesn't, remember your loss. Okay, and so anything higher than a half a standard on the $500 to $1,000 account, that's risking a little bit more than what you should off one trade. And if you got a couple of trades in, then you already know you shouldn't be doing that anyway. Okay, $1,000 plus, depending on. If you got probably like 5,000, then I would say, you know, you can add a couple of standards on there, but $1,000 account, you shouldn't be risking anything higher than the standard. Because we got to remember, and somebody could just do the math. If we got a 30 or 40 pip stop loss, let's say we got 30 pip stop loss, and I'll risk a standard, which is $10 per pip. Okay, $10 per pip, right? Times 30 is what?
300.
So if I got
What they
1,000
said.
in, right? So if I have $1,000 in my account and I just risked a standard and it gave me a stop loss of 30 pip stop loss, I just lost $300 to my $1,000 account. So now I only got 7. Well, if I do that for 2 days out of the week, that's a rough account. Now you only got 400 left. So you started the week off with $1,000. You risked a standard or higher. Now in 2 days, the market was trash and you just had a couple trades. And so now you at, Q said, up out of there, you up out of there. Exactly. Now you at under $500, $400 on your great 1,000 account that you had. Is that smart?
Not at all.
Nope.
Nope.
Yeah, sometimes we just gotta sit and think what makes sense, what's common sense, and you know what we do in the market. And I'm talking, when I say we on purpose because I've done it. I've done the opposite of everything I just put on this thing. Right? I don't share anything with y'all that I haven't experienced myself. If I haven't experienced it, or if I haven't traded it, or if I haven't learned it, I don't share it. Before I'll share it, I'll read up on it first. Same thing with BI. Before we share it, let's read up on it and study it first. We didn't experience that, I can't talk about it. Because then that would be lying. Okay. I've had $100 account and I done been in there with 0.25. Literally had like 20, 30 bucks left after that day. Each one of these amounts I done had, and I did the opposite. So that's why I'm telling you, doing it the opposite, you risking more. And a lot of the times, we're going to get the short end of the stick. Okay? For my funded people, because I got a good bit of people, for my funded people, right? Your account size is a little different, right? You got a little bit of extra room because you got more money to play with. But I promise you, if you think, because you got a little bit more zeros to play with that you can continue to play, you're never going to withdraw either. And you might say, Coach, man, 25K, you mean to tell me I can't go higher than a 5 standard? Heck no. I can't go higher than a 10 if I'm at 50K? Absolutely not. You don't want me to go higher than 20 if I got $100,000 to $200,000? Hell to the no. Because even though we can do it, if we lose that day, and we know that we cannot go over a daily loss, then we are running the risk in a funded account of what? Blowing our funded account. And I'm just going to tell you the truth. If you guys have never been, well, some of you have, the ones that have never been into a funded account that was already passed and live, okay? Only speaking from experience right here. If you think blowing your regular account is a devastation, try blowing your funded account. That is a devastation that would have you depressed for a while. Because you have passed, right? You passed the challenge. A lot of people don't. Oh my God, I'm so happy. I'm on cloud 9. I have punched my ticket into money every day of my life, if I want it. I felt like me having more zeros in here, I can do a little more. Well, then the same issues I was having in my $100 account, it started to creep up in my funding. And then guess what? One day, you go handle some business, you forget a trade in, you come back, it's hit your daily loss restriction. And not only have you lost, but you've now lost your whole funded account, and now you got to start back over. And now you don't get a refund. Now you back to square one. Now you back to figuring out if trading for me. Tell you right now, more zeros don't mean, Q said, talk to him, coach. Listen, more zeros don't mean you're supposed to go crazy. You still remember, we're in a market that don't really like us and don't want us to be in here. No way. Okay. The only reason why the market movers okay with traders being in there, because that's how they really grow their accounts, is market movers, because they take our money. So these are risky lot sizes. Okay. Y'all see the bottom? Put those lot sizes right here, put your account in danger trying to get more money. Because remember, you will lose one day. And you don't want that day to be the day that you went in double the regular size and it go the opposite way. I'm telling you now, everybody know the feeling on this call. You ain't gonna have a good day. And depending on how much you risk, you ain't gonna have a good week. And I hope to God you ain't use no, regular bill money, because then you ain't gonna have a good month. Okay? Everybody see this? Risky lot sizes. Now I want y'all to look at these numbers. Let's be honest with each other, right? Ain't no need for y'all to act like this ain't never happened to y'all, because I know it's for a fact. It happened to me, so I know it happened to y'all. Can everybody agree that we done went in a little extra from what some of these lot sizes is to the amount size we had in our account? Let's just be honest.
Yes.
No doubt.
Yes.
Facts plus tax.
Champ says she talking about me. He's so stupid. Listen. And then after we look at it and we start staring at this screen long enough, we like, now I see why I haven't withdrew a lot. Because I was risking more than I should have. to gain more. I was risking more to gain more, doing the opposite of what we're supposed to do. Most of the time when it comes to people in this particular program, most of y'all know what y'all doing now. I'm gonna tell you, I was talking about a few people in my program to somebody on Sunday, and I told them, no, it wasn't Sunday. It was I had a podcast that I did last Thursday. Somebody wanted me on, and I told them, they said, you want me to shout out anybody? And so I was just telling them about the program, and so I was letting them know, I got some people in my program that I put up against master traders. They good. Most of y'all really good, be honest. But a lot of us just can't get this part together. And so it might seem like other people that you may know in other groups are getting ahead of you and you started before them. But that might just because they probably got this side down and you don't. And then they don't know much about the market as you do. You can run circles around them people. But they withdrawn and you're trying to figure out what is it. Well, it's because you got to get this part down. Okay? Because this is, you can't go around it. All right, so these are my risky ones. My risky ones. Now you can take my advice on those risky ones if you want, but they, you know. Few reasons why we need to ask ourselves why it's too risky. We already went over this, but I'll say it again, okay? Because if I cannot stay in the trade longer than 15 pips of withdrawal, then you know your count size too, your lot size too high. 15 pips you can't stay in drawdown? That's past risky. That's just insane. You mean to tell me your lot size, like let's sit here and have a mental just conversation. We thinking. My lot size is so big that 15 pips, I'm down. Say if I got $1,000 in my account, 15 pips, I'm down to $300, $400. I got $5,000 in my account. 15 pip drawdown, I'm down almost 1,000. What? If you can't stay in the trade longer than 15 pips drawback, your lot size too high. And we know, let's just keep it real, y'all. We're gonna keep it real tonight. We be multiple, put the same trade in, pop, pop, pop. 3 of them in there. Oh yeah, I'm about to bust it down. I'm about to snipe. I'm about to eat off this thing. I'm gonna put another one in there. And I'm gonna hit the button again because it's still going down. Like for real. Y'all be honest. We done all did that now. I know I have.
I did.
Okay? Like I'm about to eat off. Listen, US 30, I'm about to eat.
Yep.
And then you mess around and you do the measurements and see how many pips you could potentially get. And yeah, I've been there before too.
Okay,
I did little lot sizes though, but I just did too many pushing the button.
Listen, it's almost like our finger get Tourette when it comes to that doggone instant execution, and they just keep on hitting it. Like almost we having a seizure, just keep on. We can't help it. And you be like, whoa. And then afterwards, you see that drawdown coming, and then you sit and you have a conversation with yourself. And you ask yourself, why the hell did I hit that button that many times?
That's funny, isn't it?
Okay. You ask yourself that. You're talking to yourself now, looking at the doggone screen. Why I do that?
I know better than that.
I know better than that. Now your whole mood off. Now that drawdown, 3-4 trades in, your whole mood off now. Anybody talk to you for the rest of the day, they're not getting the best version of you. Okay? They're not getting the best version of you. They might get how you feel in the market, they probably gonna get. Okay? It's too high. If you 15 pips draw down, you can't stay in that, stop. You're risking too much to try to gain a lot, but it's probably not going to go your way simply because if you 15 pips drawdown, it's to the point that you got to get out. Boom, now you took a loss. Well, then what we're going to do after we take a loss? Because we already know we ain't taking a loss laying down. We going back in, son.
We spinning the block, B.
Yep.
We got
We
to
going back in. Okay, ain't nobody, look. Now we get real
Revenge
pissed.
trading.
Right, revenge trading, okay? We get real pissed in. And we like, oh, market, you ain't finna take from me. I'm going back in. And guess what we realize? We don't realize this. The market gonna eat you alive every time. It got trillions, boo. You
Worse.
can't play with it.
Yep, worse.
But we go back in because we're like, nah, the market ain't finna just take that from me like that. I'm going back in. I'm gonna get it back. Now you got that loss size got to be extra high to even get that back. Come on now. What we thinking? We going toe to toe with the market. Do it ever end
Nope.
No.
Not ever.
well? Okay, not say that again. Most of the time it's a no. 99% of the time it's a no. I'll just say it like that. Because you might can grab it back, one or two times. Oh yeah, I got it back. But then the next day you like, man. Q said the bop in the head is real, shorty. Listen, and you frustrated at that point. You frustrated.
That's when you want to quit, probably.
Yep, ain't no problem, girl.
Oh no, that's a fact. You be ready to walk away for sure. Ready
I
to
was
walk
thinking
away.
that kind of today.
Right, but then,
I'm a lousy trader.
right, but just think about this though. When we have those thoughts, a lot of us never want to deal with us. We blame it on the market. We blame it on my surroundings. I got sidetracked. Somebody was talking to me. I was at the doctor's office. I fell asleep. And, we have all these reasons. And we go along with that because we don't ever want to just look in that mirror and say, that's your fault, right? You shouldn't have been in there, right? You shouldn't have hit that button 3 times to get in the trade. You know that, but we did it anyway. So before we'll say, let me get me together, we'll say, no, trading ain't for me, or let me take a break because it's too much mentally. All right. But the thing is, we never start telling ourselves, well, if you wouldn't have went in so many times, you probably could have just stayed in that one. It went down like 20 some pills, but it came back, but you went in 3-4 times. Okay. So the second one, right? You can be a good analysis. Your analysis could be on point. I'm talking about straight sniper move. But you still got to remember, when you over leveraging, the market has pullbacks. It has to. We know that. It got to pull back. Some of the currency pairs that we like to trade do deep pullbacks. So let's just think about this. If I'm already risking going into the market, I added some more lot sizes than I should. Now I'm in the trade. It's pulling back. I got to abort this mission or I'm about to blow my account. Whew. That's a rough day. So then this happens to us. We'll look in the chat or we'll look online or whatever other groups or, anybody talking on Instagram or TikTok or whatever. And we see that the move happened. My analysis was correct. Now, everybody on here need to be unmuted and saying, yeah, that's me, because I know that doesn't happen to everybody.
Yeah, and or you can see that it worked out for somebody else and it didn't work out for you.
True.
Be ready to throw your phone, shawty. I swear to God, you be ready to throw your phone.
Okay, you ready to really throw in the towel. You like, boy, man, forget this. Like, the trading ain't for everybody. Maybe just ain't for me. What, like, God, why you... listen, y'all don't even want to get spiritual because I done blame God. I done blame the devil. I done blame listen. praying to God, please, Lord Jesus, you said you love me. Lord, you said in your word, God, that I will be a lender not tomorrow. Please, Lord Jesus, let this thing go up. Please, God, you know I'm here, Lord Jesus. Man, please. Say all right now, that don't work. Okay? I'm gonna try that. But the analysis play out. And you be still trying to figure out, well, I ain't grabbed, how I ain't came up. They got in around the same time. But one part you forget to say when we get on apprentice night, you forget to say this part. Well, I lost the trade because I had to abort the mission before the drop happened because it pulled back and I had to get out because that lot size was ridiculous. We leave that part out a lot of the time. We know it's the pullbacks coming. That's why you're supposed to go in a little lower lot size so that you can stand it if you need to, because you know the move probably setting up. But we still do the opposite. So you could be a great analysis. Your analysis could be on point, but you got to remember you got pullbacks in the market. And you know, a lot of us like to trade that crypto and no indices, gold, oil, and those are the riskiest trades, riskiest currencies pairs, and we like to trade them, but we forget who we going to war with. Okay. Who you going to war with when you go in gold? Who are you going to war with when you go in US 30? You going into war with Boeing, Amazon, Apple. When you go into war with a lot of different entities that's more powerful than you. So you know you got to make sure you on point. Okay. Now, number 3. Why is it too risky? Because you want to only risk small so that you can live another day, like we said. You can't stay in when it's too high. You can't live another day. You can't take a little hit, shake that thing off, and get back up tomorrow. Your lot size is too risky. You lose 1 or 2 times throughout that week. You can't get back up the whole week. The market did a TKO on you. Okay? So we seeing why is it too risky? And we know it. We know why it's too risky. All right, so now we're going to talk about some realistic, good risk management. Realistic. Like I said, you might not agree with these numbers, but I'm telling you, will work. You could try your way, and we probably will be going over this issue again next month. Okay. Good risk management. So while trading, we're not trying to grab all the 7 trillions in one day. It's impossible. But our brain is designed and wired to think that we could grab a lot. Go back, grab some more. Oh, you want me to get some more? Grab some more. That's what our brain is saying. Okay. But when you have good risk management, you will be setting realistic goals that you can continue to get daily. Right? Everybody ask yourself this question. Do I want to risk a lot and try to get more and come up short at the end of the month? Or do I want to have good risk management that I risk a smaller amount every day, grow it, and I'll be able to withdraw at the end of the month? That's a question. Give me your answers.
Risk a smaller amount.
Smaller amount.
The latter.
Mhm.
But a lot of us, we don't want to look at no $100, $200, or $1,000. Oh, that ain't nothing. You say I got a half a mil in there. You talking about only get that a day? Oh, I could get that. Huh, okay. Huh, all right. So you got $100 account between 100 and maybe 250, I guess. Risking that 0.10 or lower on each trade. That's good risk management. Okay, years ago they had these things. They still have them on the internet. They'll say 0.01, and in my head, I'm thinking, man, ain't nobody doing no 0.0. but some people do, but most people don't. So one trade, if your account is between 100 or 250, that's the lot size. That's good management, risk management. 500 to 1,000. Good risk management is a 0.25 or lower. Remember, we will lose. What happens if I risk more than that and I lose that day? Well, 15 to 20% of my account gone, one trade. Okay, we got to keep that in our head, remind ourselves of that, right? $1,000, a half a standard is good risk management. Okay, now, of course, we know when it comes to indices and other stuff like that, you know, that's about, I would say that you shouldn't even be trading the index or gold or a crypto if you only got $100 in your account. You should not be trading an index or gold or anything like that with $100 in your account. Because one day of losing all that, your whole account gone. Right? So my funded account people, I really wish all of my funded people was on this call because they really need it.
Hey, quick question before we go there.
Uh-huh.
So like if you got 2,500 in your account, with the same example of $100 to $200, 250, you said 0.10 would be great. So would a half a standard be a good idea if you got 2,500 as well? So like keep that same thought process of 1,000 to 2,500, a half a standard.
So if I have $2,500 in my account, I'm gonna just keep it funky with you and keep it real. If I have 2,500 in my account, I would probably do a 0.75 to a standard. That's good risk management.
Okay.
You get 3,000 to a standard, even 1.5, to be honest, when you get to the couple thousands. But I don't want to risk, if I got 2,500, I don't want to risk no 2-3 standards and then one 30, 40 pip loss. I done lost like $500. That I'm gonna be pissed. I'm gonna be real pissed that day. Yeah, so yeah. Hopefully I answered your question, Q. Grace says,
Yeah.
so we split that between trades. If we want to do more like 0.25, 4 or 5 trades. Grace, if you want to trade the same trade 5 multiple times, or you got 5 different trades. First of all, I'm just gonna keep it real with you. You shouldn't have 5 different trades. You shouldn't have 5 different trades at the same time at all, ever.
Okay. My mistake.
That's okay. A lot of us do
That's
it.
what happened. I blew my funded account.
Grace,
Plus the internet wasn't working. But I did little 0.05, you know, I thought I was doing good.
Grace, inbox me on Telegram after we get off this call. I don't care what nobody tell y'all, and y'all do what y'all want because y'all grown people. 5 trades at the same time, you better, first of all, if you're doing something like that, your first trade, if you're going in on a regular lot size, you know, good risk management lot size, the rest of your trades need to be lower lot size from what you in on the first one. You should never, ever in your natural life, as long as you are living, have 5 trades, same lot size, and thinking, oh, I'm about to kill it. Because the drawdown you're going to get with one is going to be what? The drawdown with all 5.
That's what happened.
Grace, don't feel bad. You know why? Because a lot of people on this call done the same thing, Grace. They just ain't
That's
going
my
to say
little
it.
baby funded account. I mean, I was late
Listen,
trying, but
I've
yeah.
done it, Grace.
I've done
That's
it.
why.
It's all
Okay,
good.
thank you. Don't make her feel like she's the
I
only
do it all
one,
the
y'all.
time. I do it all
No,
the
I mean,
time,
I
Grace.
never had a
Thank you.
little baby funded account before, and well, you know, and then I was traveling, and the internet wasn't working. Yeah,
Oh,
not good.
Yeah, no,
Yeah.
not good.
Man, I lost my funded account like 2 days before I was supposed to get a payout. My first payout
Oh.
at that. I
Oh, no.
totally understand where you're coming from.
Q, I know
was
you need a
sad,
hug.
but I bounced back. Yeah, let's group hug.
Yeah, Q, Q need a hug for sure. 2 days before you withdraw, boy,
That's
I would have
terrible.
been looking for a bottle of gin. I ain't gonna lie.
Oh, I definitely got a drink. I ain't gonna even sit here and lie to y'all. And I told my family, leave me alone for a few days. I don't want to talk to y'all. Don't say nothing to me. People asking me what's wrong. I ain't taking no calls, no nothing. I needed a minute. Get my life in
Yeah.
order.
Listen,
Yeah.
okay?
Aw.
Yeah, that's the off, Grace. Yeah, okay. So
Okay.
if y'all
Thank
gonna
you.
be in multiple trades at the same time, your lot sizes cannot be the same. Because if I'm going to lose $100 or $1,000 from one, I don't want to lose 5,000. At least let me lose 14 or 1,300, not 5,000. Does that make sense? Or maybe I'm just tripping, but does that make sense?
Most definitely.
Okay, so yeah, watch how y'all just adding, pop, 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 hitting that button. Okay, because that could be like somebody told me, it was like, man, I was in this trade and it went my way and then it didn't. And then I was trying to figure out why I didn't go in. Well, you know, the broker does what it wants to do. And sometimes the broker tell you, oh no, you risking too much. I ain't even letting you in no more. All right. So my funded account people, risking 1 to 3 standards on any funded account is good risk management on regular pairs. Okay, I'm just telling you what's good risk management. Okay, your indices. You got 25K in there, 1 standard. Yup. I don't care what you say. Yup. 50K, 1 to 3 standards. And 100 to 200K, 1 to 5 standard. That's for indices. Regular currency pairs, 1 to 3 standards. Go over these amounts if you want to, and I'm gonna ask you at the end of the month, did you withdraw yet? You can disagree. You probably say, man, that ain't nothing. Man, I could get, man, that's 200K. Man, I can at least go to 15 standard, 20 standard. Well, then I'm gonna ask you, have you withdrawn yet? Okay, so just because you got more in there, that don't mean that you act too stupid and act too crazy like you ain't got no sense. Because you're going up against a market that could care less. Right? Any questions on the good risk management slide?
Yes. So I know you said, like, for instance, with the funded account, right? We'll just use the 50K as an example. If you enter in on the trade, right, a standard, right, and it's going in your direction, right, like you're in profit, and let's say you're up, just for the sake of the situation, let's say you up 50 pips. Would you then want to go ahead and add another standard, or is it a good idea to just wait until market structure is complete? Like, for instance, the momentum, the correction, and then at that, right when it's getting ready to go into the continuation, add in your second position.
Okay, so if I'm already in and I'm up 50 pips, have I secured this 50 pips or I'm just letting it roll?
I'm letting it roll.
Okay, first of all, if I'm up 50 pips and I feel like it's going to continue up, I'm going to secure the 50 first before I start adding any more lots, any more trades in. I'm putting my stop loss in the front of the 50. Okay, because I need to grab something. If I'm about to do some riskier stuff and add another trade, I need to grab something. I need to secure something. Okay, so I secure that. And then I go in for another, but I don't go in at the same lot size. I need to go in lower because my big one is already secured. I don't want to risk my big one. I'll risk this little small one. You feel me?
Okay, so using the standard as the example on the 50K, right? So let's say you're up 50 pips. You got the standard already ready. You've already secured it, and you saying, you know what? I want to go in but I don't want to go in with another standard. Is it better to do half a standard, or
It
is it
is.
better just to do? Okay.
Yeah, it's always better to any other ones that you're adding, boom, boom, boom. You don't need to go into the same lot size. Trying to get a whole lot, trying to go in, the drawdown is going to be massive, and you're going to be pissed off for the rest of the week, for the rest of the day. So if you went in 3 times off this trade, it created you a flag, another continuation. I go in again. You don't need to have the same lot sizes as the first original one, because say if it pulls back and your lot sizes is the same as the others, well, at the end of that day, you would have lost, not gained. Because what you secured, you got, right? But then if I went in 2 more times with one standard still, and it pulled back on me, right? It pulled back to where that 50 pips I secured, I just literally lost what I had just secured. So I either end the day break even, or I end the day with a loss. You see what I'm saying, Q?
Yes, ma'am. Most definitely. Most definitely. So for clarity's sake, I go ahead, I got 50 pips on that one standard. I'm up 50 pips, right? If I go back in, right, I've already secured the 50, we go in with half a standard. If there is a small pullback of 20 pips and I get scared and jump out, at least I still have something versus it pulled back the whole 50 pips and I got nothing and basically broke even.
Yes, sir. Every day, every hour, every minute of the day, and twice on Sunday. Yes, sir.
Makes sense.
That makes a lot of sense. Why am I going in multiple times, but I have not secured the first bag? So you about to rob the second bank, but you still got men in the first, and they don't even have no bags out in the truck waiting that we already got? I'm not trying to rob another bank if I haven't even got the first bank bag secured. Does that make sense? Like if we really legalize bank robbers, does that make sense to go rob another bank if you haven't secured the first bags of the first bank? Everybody talk to me.
Thanks.
Yeah, no idea.
Like if we're taking real life situations and we put it in the market so that we can understand it better, does that make it, would you call that person a smart bank robber?
Nope.
No.
Because they, I mean,
Oh,
the
he a
goal
dummy.
is, right, that's a dummy. The goal is for me to get a bag. So if I tell my crew, yo, listen, I'm gonna go to this next one while y'all working that one, and we still only got 5 minutes, 3 minutes for the police come. Well, when I drive off, because I hear the sirens, and we run out, and I realize I'm really just sticking the place up. I ain't even grab nothing. They got to run out. They ain't grab nothing. Matter of fact, the police done came by that time. One of my men done got shot down in the bank. What we do all that for?
All you got is 2 airbags.
You just having fun with the gun. That's it. Just having fun with the gun.
Okay. So if we say, now, I mean, I ain't calling nobody dumb now, but we do some crazy stuff in the market. So if we say that bank robber is not smart, then why we do it in the market? So if somebody was looking out, if somebody was looking in on your trading account or my trading account through the years or the months, and they say, well, why would you do that if you didn't secure that? We can't be looking crazy like, why are they asking me that? Because it makes sense. The goal is to secure the bag and grab what you can grab. The goal is not for me to add risk upon risk upon risk and then expect the market to behave, because we can't control its behavior. So you're never supposed to be in 5 trades at the same time with the same lot size. That's just not smart. If you're waiting for each flag and correction and you're getting in again, lower the lot size. You're getting in again, same thing. And guess what I'm gonna do? Secure the first one, put the stop loss in the front. So at this point, I am in a risk-free trade. And then when my next entry came in and it went up 25, 30 pips, guess what I did? Put my stop loss in front of that too. So guess what happens on the third one? If it pulled back 10 pips, 15 pips, I don't care. I've already secured 80 pips. The first one was 50. The next one was 25 to 30. I'm still up. But me, already up 50 pips, add another entry in standard, okay? Add another entry in standard, and then all of them pull back. I'm pissed off because that is not a good day. Okay? Does everybody understand what I'm saying and get what I mean?
Yes.
Yes, thank you.
We gotta start thinking, right? We have to start thinking before we hit that button. Okay. Now we got goals, right? Everybody have goals in life, period. Okay. And we know we sticking to our normal routine. Okay. And real market structure, not that gambling crap, not that I'm gonna hit the button off an impulsive candle. That's not market structure at all. Okay. And I'm gonna just go ahead and add this in here so you can be clear and notice. Trading the news is not market structure.
Say it again, say it again, say it
Trading
again.
the news is not market structure. Okay. We just show you how to trade it if that's what you feel like you want to do, because it is a quick way for you to grab and go. But it's not market structure. Because if it was, that means that they just gave everybody a check to write whatever amount you want to write on it, because we know what the news is going to come, because we got the apps to tell us when news is coming. So if it's going to behave to the regular structure of our market, then we should be all billionaires. It's not market structure to trade news. It's just a way for you to grab and go quickly if you know what you're doing. Okay? So don't think you're an assassin because you trade the news and you grab a bag. No. Okay? So we sticking to our normal routine. Okay? And real market structure in order to stay consistent in your daily goals. All right? Now, we're having a great day. We're having a great day in the market. Twan said, I needed this today. I was upset I left money on the table. Listen, Twan, listen to this, and this is for everybody. You're going to always leave money on the table in the market. We only got 24 hours of the day. We can't sit here and trade 24 hours of the day. And it's trillions of dollars a day. So we're going to always leave money on the market. You should never be upset. Because all you can say is, if God got me to wait tomorrow morning, then I can get some more. And the next day and the next day. So never be upset because you left something on the table. We're going to always leave crumbs. We're going to always leave the bags. We're going to always leave it. Right? So let's just say we got a good day in the market. My goals are met. Whew. Thank you, Lord. Get out of the market at that point. Okay? The urge to stay in will consume you, and you will probably lose what you just got. Because you need to remember again, what you don't control, the market will control you. It will control what happens to your fate. If you don't control the urge to get out, right? He said, then you chase it. Right, you're trying to chase it, but you can get, girl, you can be Usain Bolt. You ain't fast enough to chase this market. I promise you.
Nope.
Okay. You can either control the urge to get out when you get your daily goal, or the market gonna control what happens to you. Well, Coach B, I said a few weeks ago, you know where the liquidity at, or you gonna become the liquidity. I don't even want the market to even want me to become liquidity, because after my goal, I should be out. Okay. Now, the flip side of the goal, Matt, is we know we're gonna take some L's. So we need to prepare for what happens when we do. Okay. I took a loss today. Well, you wouldn't be so much irritated after you take a loss if your loss size was controlled. Okay. If your lot size is not massive, you all right with that L. Okay. If your lot size is too much, you're not all right. Okay. Now, just like we have a daily goal in the market, and after it, we get out, we should have a daily loss amount, whether it's the pip count or whether it's the amount of money. If I lose whatever amount of pips in between that day, it don't matter what trades I was in, then I'm out of the market for the rest of the day. If I lose or whatever dollar amount that is, that each person can say for whatever account size you have, then I don't trade anymore that day. I don't revenge trade. I don't try to go back in. Okay. Like, you have to have that in your head too, because you're going to take a loss. Well, if my account is $1,000 and I've already taken a $150 loss or $200 loss, you shouldn't even be wanting to trade for the rest of the day, because that's 10% of your account. So you trying to trade more is more risky. Okay. So just like you have a daily goal, you better know what amount that you are willing to lose. After that amount, you need to go. Because if you don't have that as well as the goal amount, then you're going to continue to go back in. Let me try to get that back. Go back in. Let me try to get that back. And you never give yourself a mandatory, that's it. Like, you got to say that to yourself. Somebody say yes. That you have to say that to yourself. I am not going past a $100 loss, or I'm not going past a $500 loss, or $1,000, whatever your account size is. If the first two trades you went in didn't go your way, and your daily loss goal or your daily loss amount is hit, you don't trade for the rest of that day, because anything else you're going to go in, you're going to be irritated, pissed off, because you already lost that. You're trying to revenge trade to get it back. Now you mad with the market because the market ain't behaving. Now you got all these other theories. Now you taking more trades. You ain't even waiting for all your confirmations to be in. You are all over the place. And we already know we shouldn't be even trading when we are all over the place. Okay? Ask ourselves, and this is a question that I want everybody to answer. Do you have that? I know you have your daily goal amounts. Have you all ever thought about what's my daily loss amount that I will not go over and stop? Have you ever thought about that?
This is Brian. Yes, I have, but I messed up. So I am not going to do it no more, because I ended up revenge trading. And I lost basically double that same amount. So I'm not doing that again. I'm sorry. I can't do it.
Okay. Listen, prime example. I didn't know that happened to him. He just told you all facts what happened to him, and probably what happened to a lot of people.
I ain't even gonna hold you.
Another
My daily
thing.
loss is if I break even.
Okay. And that's you. Everybody has their own thing. If you break even, you like, look, that's it. But the reason why a lot of our accounts be blown is we don't, like he just said, we don't stick to that. Like, if that's the loss, that's the loss. Take that thing like a champ and go back tomorrow. You just gonna have to, like, you get knocked in the face, adjust your head, shake that thing off, go back tomorrow. but trying to getting hit, and then you shake it off and you want another round, and they done knock the front part of your teeth out. You saying, forget that, I want to go back again. And then they knock the whole jaw loose. And then after that, you like, somebody help me with my wounds.
At that point, you can't talk no more. Your jaw loose.
Okay. And that's what happens in the market, right? What Q just said earlier, I don't want to talk. I ain't wanting to talk.
Yeah,
Well,
you right though, because when the market hits you like that, you can't see straight. And the markets and the stock charts don't look the same no more.
Say that again, Biz. Oh, Lord Jesus. After you have, listen, that was good stuff right there.
Absolutely right. Absolutely right.
Okay.
I'm sorry, say that one more again. Say that one more again.
After
You get hit
you
upside
have,
the head. Oh,
right. Say it, go ahead.
when you get hit upside the head, it's just like you really got punched in the face because you can't see the market straight no more. So you got to get back, regroup.
Listen.
Oh yeah, that's a fact.
The market done, you done took that L, the market done literally, I'm talking about knocked half the top row of your teeth out, and you talking about, nah, I'm going back in. Well, then it hit you again. Now, like you said, it done took your whole jaw off. You can't even talk, bro. You so pissed off, you don't want to speak. And depending upon if your lot size too heavy, you feel like they just knocked the wind out you. But the thing is, we can't expect somebody to help us with our wounds after the market beat us down. We did that. If you have a loss amount, you got to get out of the market and let it play out for the next day. Live to fight another day. But you can't fight the ball. The market done knock the crap out of you today. It's true. Like Bizzle said, your charts don't even look the same. You looking at the market like, wait, did I really see what I thought I saw the first time? Because, oh, yeah, yep, that's a retest. Look at that, yep, You put that thing big, that thing ain't even hitting the zero line.
You found a new zero line, a new 618, a new 786.
Listen. Y'all playing, but for real though.
No, for real. For real.
You don't even look at the market and saying, I swear, you would swear that thing hit that retest. Oh yeah, it was a retest. You go up, show me what a retest said. That thing ain't hit the zero line. That thing, that little doggone thing under the thing. What do you mean? The market done got you all discombobulated. You ain't know what to do with your life. You looking like, Lord, take me now, because you want to cry, you pissed off, you want to drink, you want to smoke, you want to punch a wall. The lot size is too heavy. You thinking like that bank situation sound good.
And then you look at you look at the high time frame like, oh my God, what the hell was I doing?
Right. Okay. So we have to have that loss amount or that lost pip amount. We have to have that in our minds as well. Because we know we're going to have it. We're going to lose sometimes. So if it's past your amount, I beg you to just stay out.
Coach, I got a question.
Mm-hmm.
All right. So you got your loss amount, you got your gain amount. Say it's 1 to 2. So let's just say you got a 500 pip stop loss, and you have, and I'm just going off of my Hugo's Way account, and you have 1,000 pip gain, right?
Mm-hmm.
Now, once it hits your 500 pip stop loss, that's it, right?
Yeah.
500 pip stop loss.
Well, see, he
All right. So I'm
his
Hugo's
broker
Way.
is different.
So, yeah. So like so if you measure a move on TradingView, the right side of it might say like 3,000 pips. The left side may say 300 pips. That's your pip goal. But on Hugo's way, it's actually the 1,000 pip goal. So you hit your
Yeah,
stop loss.
it's just
Yeah.
it's just a different pip count for his side. So it's very similar to what what your goal, your loss is. It's just calculated different. But if
Right.
if you just don't need to trade no more for the rest of the day if it hit, period.
Right. So if it hit, that's it.
Yeah, it don't matter what your goals is. It could be a 10 pip. I ain't going over $50. I ain't going over $2. Whatever that is for your account size, then that's it. You shouldn't be in no more that day, and because you're only going to do damage to your account by staying in.
Which I've done. Oh my God. Oh.
Mm-hmm.
All right, Coach,
I
I got
mean-
a question.
Go ahead. Mhm.
Okay, no, I didn't know if you was finished or not.
Go ahead.
What should our stop loss size be?
I would say 30 pips. If I'm looking to gain about 100 or something like that. If I'm scalping and I'm really just trying to get my whatever, then your stop loss can't be higher than 10 pips or 15 pips because you're scalping. So you're
Right.
trying to just get in and out. But if you you see the move and you look for the move to play out, a couple of 100 pips down, 30 pips is like the minimum. I would say if your ratio, if your pip size that you're trying to gain is equal to your stop loss zone, then that's not going to work, because I don't want to be the same risk. I want to be less risk, more money, not same risk or more risk. You see what I'm saying?
Gotcha.
Okay. Yeah. All right. So we know what we need to be doing when it comes to the goals. We got to get out after our goal is met. Remember what we said the first slide, we cannot grab it all. So stop trying to. The moment you reprogram your brain to remember and see, I just need to get my goal. And I need a realistic goal. Okay, a realistic goal, because I got to factor in news, economy, my own eyes, right? The market movers. I got to factor in those things to my goal. So I need realistic goals every day. I get it. I need to go. It's not a can I stay in? It's a mandatory thing. Because if you could get the discipline to go out when you're supposed to, stop the loss when you're supposed to, then you can be able to withdraw every month. Don't get these things down pat, and you're not going to withdraw every month. Telling you the truth now. I'm telling you the truth. All right, so we got one question. And this is a question that I added because I really want to know. From the way that we have been trading, I say we because I am a trader, so I include myself on everything. If there was a Traders Anonymous, would I be recommended from Coach? That's a question that we all ask ourselves, and I need y'all to answer.
Yeah,
Hold
you
on, hold
put
on.
me
Let
in
me
there a
make sure I
long
understand
time
what you're
ago,
saying.
Coach.
You're saying if there was a Traders Anonymous, are you saying like you would put us in there?
Right. Would Coach recommend me from the way that I have been trading?
Oh, I would be the first. Throw me in there now. Just go on.
No,
Just let me play some games.
me first, bro. I'm battling you for that. It would have been
Me
me
too.
first.
Yeah, me too.
Okay. So now let's think about that. If we had another issue, right, that our family would have to step in, do a little, come to Jesus moment, and they would recommend us for an anonymous program because they see an issue that we need to tackle. Okay. So if there was a Traders Anonymous, and I would recommend you, then that means that we had to tighten up, right?
Hey, Coach, I know it would have been me first because I came to you for you to have an intervention with me.
Well, Bizzle, I wouldn't even have to recommend you. You said, look, put me in there. I need it now. I mean, the first issue, I mean, the first thing they say in the anonymous, they say is, well, and admit that you got an issue. So if that's the case, then before we get to a point that somebody is going to have to step in and say, wait a minute, you might need to stop for a while because you're doing more harm than good to yourself and your account.
You did. You told me to go on demo.
Okay. Right. That's for real. Like for real, this is a question that I really want everybody to think about when you leave off this session. I don't want nobody to be, you know, doing no intervention with me. Okay. And telling me that I need to probably stop because you suck, or you know, you ain't get it together, or you just losing. You're you know, like that's what happened when I first started to trade. That's why at first I was just, you know, trying to talk to different people, my family, different people about it, but they didn't understand it because they weren't traders. So all of them told me I was crazy and I needed to stop because it was like, girl, like you losing your money, like you literally not doing. It's not working. Like stop. I had to have a moment with myself. Call my coach. Stevens, look, whoa, you know, I'm older, you know, I'm not young like y'all. I'm not in my early 20s and stuff and vibrant. My brain is, you know, all over the place. I got a lot of responsibilities. I got all this stuff going on. Maybe trading just ain't for me. And so this is the question he asked me. And I just asked other people too when I talked to him. Have you ever looked at the market and analyzed it, got into the trade, and you won the trade? I said, yeah. Have you been able to do that consistently? And you know, yeah, I've seen some blue, you know, take profit, hit, and everything. So that means you could do it. So that means it ain't a skill. Well, if that is it, then that means that it's Shanika. I gotta get her together so that they both can come together. The skill and my discipline and risk management, they both can come together so that I can press withdraw to that broker. Because if they both don't get leveled and they both don't come together to work, you're never going to withdraw. You're only going to withdraw what's left from whatever you already withdraw, but you're never going to withdraw from this ATM. Something that everybody needs to think about. Do I want to be in Traders Anonymous when somebody's telling me some steps that you need to take, 10 steps? What's your triggers? What happens to you when this happens? What's going on around you? All the things that people say when they go to, you know, their meetings and stuff like that, you hear about if you ever went to one or somebody your family talked to, even if you're not even in, you know, a program, just talking to different people, having a life coach, having a, you know, someone that you go to that gives you sound advice. They ask all these questions when you go with them to an issue. So if you don't feel like you need that type of intervention in other areas, you know, if you're a drinker, you know, you drink sociably, you don't feel like you're an alcoholic, you can control that. You don't want to drink every day you wake up. Okay, you can control that. I drink all the time, but I'm not an alcoholic. You know, I might even smoke. I'm not a, you know, a crazy smoker like that. I mean, you know, you might even gamble, go to the casinos, go here and there. I gamble, you know, when I go to my friends, we hang out, but I ain't, you know, addicted to it or nothing. I ain't about to just, you know, gamble my house away or nothing. Well, if you can control the other things that you like to do, even if it's eating, even if it's, shoot, you got people that it's all kind of stuff that people like to do. So if you can control those things, then you can control you hitting that button 5 times, 6 times. You can control adding that lot size higher than what you know it's supposed to be. You can. You don't want the market to continue to control what you're doing in the market, what the loss that you're getting. The market controls a lot, and you don't want it to be controlling you. So you have to get that part together, right? That part of the brain that's telling you to hit that button, that part of the brain that's telling you to go against what you know, that part of your brain that's telling you, I got family's responsibilities, my job, catching hell on the job. I got other things going on. This person need this from me. This person need me here, there. I'm all over the place. I gotta get it. I gotta get it. I gotta get it. I gotta get it. Calm that part of your brain down so that you'll be able to withdraw every month. Any questions? Any questions?
No questions. Just thank you. This was very informative. I needed this.
Facts, me too.
Yeah, thank you.
Yeah, appreciate you. Thank you.
Thank you, Shanika. I have a
Right with that.
question.
Mm-hmm.
Is there a way, a calculator or something to help us calculate like pips and dollars and so that we know? Like,
You talking about like on TradingView, it's like a little I'm gonna show it to you, hold on. It's like a button that'll show you the risk to reward on the pip count, but it doesn't really show you the amount because you know TradingView doesn't know what amount you got in your account. I can send you, Grace, some information on what each pip actually is equal to in dollars, so that you kind of know how much that pip, you know, that lot size equals to, so you'll know before you go in, you know, how much you even risking. So if you got $100 in your account and the 0.10 is 10 cents, then you know, okay, if I'm doing 30 pips, I can send you that. But TradingView can show you like, you know, how much pips, but it doesn't show you the amount of money because it doesn't know how much money you have in your account.
oh, got it.
But I'll send you a picture of it.
Okay, thank you.
Mm-hmm. All right, guys. Hopefully you guys have got some, you know, good information off of this risk management course. You know, and you're able to apply it while you're in your trades. And I will see you guys on the next session.
Thank you.
Thank you.
Appreciate you,
Thanks,
coach.
Coach.
Y'all be
Appreciate you.
safe out there.
You too.
Y'all welcome. Y'all
Good night.
welcome.
Thanks, coach.
You're welcome, y'all.
Thank you, Shanika.
You're welcome.
Hi, everyone.
Have a good night.